Trading bullish and bearish divergences at key levels is one of my favorite trading confluences. In fact, I don't personally enter a trade unless I see bullish or bearish momentum in my favor. I use something called a multi-time frame divergence analysis, meaning I'm starting with a higher time frame and then I'm going down to a lower time frame, making sure that momentum is aligned on every single time frame. What this does is offer the highest confidence trade, the highest probability trade with the best risk to reward. In this video, I'm going to go through how I use my own custom trading oscillator called the EzOscillator to find winning setups every single day in the markets. This works across crypto, Forex, stocks, NASDAQ, you name it. I'm going to make this video as beginner friendly as possible. We need to start with what is a bullish or bearish divergence. So a divergence is when price and momentum are doing the opposite, okay? So let's say price is making a lower low, momentum will be making a higher low. This right here is an example of a bullish divergence, right? Price making a lower low, momentum making a higher low. Okay, obviously the opposite will be true for a short position, okay? Price making a higher high into a key resistance level as momentum is making a lower wave. We would call this lower wave the trigger wave, or the wave that we actually activate the long or short position. So bullish, okay? Bullish is price making a lower low as momentum is increasing. And then bearish would be price making a higher high as momentum is decreasing. And the second wave, or the smaller wave, we will refer to as the trigger wave. Now, how do we actually use these to find an entry? This is where we use a multi-time frame analysis, looking for overbought and oversold momentum, and then going down to a lower time frame and looking for these divergences at a key level. So what do I mean by multi-time frame divergence analysis? Well, a lot of the times in my setups, you'll see me say I'm looking for 1 hour oversold and then 15-minute and 5-minute bull divs. So what I'm saying here is that on a 1 hour time frame, I'm looking for the momentum oscillator to be in that oversold zone, or approaching that oversold zone. Once that's checked off, I'll go down to a 15-minute or a 5-minute time frame to look for those bullish divergences, which we see right here. And last but not least, I'm looking for price to be at a key level. In this case, we are taking out external liquidity. We're also at a key support level with price history. If I look left here, as always, if you guys are having trouble identifying key levels, you can always use our automatic key levels inside of the EzAlgo trading indicator, which also comes with access to the momentum oscillator in the first link in the description below. Okay, so you can see here we have our 1 hour support zone that we are currently bouncing off of, taking out external liquidity right here. We have that 1 hour momentum oscillator approaching that oversold zone as we're coming down to this level. From that point, we drop down to a lower time frame and look for bullish divergences. So again, here you can see price is making a lower low as momentum is increasing to the upside. You can see here that our indicator is showing us when these bullish divergences confirm. This is a real-time non-repaint indicator. None of our indicators are repaint. So these signals will flash in real time if you want to set alerts on your trading view, which I would highly recommend, by the way, so you don't have to be on all the time waiting for this to play out. You can set an alert. Let's say you're taking a trade on Ethereum, set condition to oscillator V6.2, and then you can select your alert here, right? Either bullish or bearish divergence, or you could do a bullish or bearish divergence in overbought or oversold zone. For example, you can see how these bullish divergences are occurring in this oversold zone. This is a high probability divergence. Coupled with the fact that we are at a higher time frame key level, this is a high probability setup. And we're seeing some reversal signals on the algo as well. Now, for starters, I would stick with the 1 hour to 15-minute strategy. So looking for the oscillator to be oversold on the 1 hour time frame. If you're swing trading, you can look for this on a 4 hour time frame, then down to a 1 hour time frame with bullish divergences. But most of you guys are probably trading on the 15 to 1 hour time frame, which is what I would recommend. So use a multi-time frame divergence analysis on the 1 hour to 15-minute and then down to 5-minute time frame if you want for that entry. So how do we actually enter the trade given all of this information? There's a few different entry triggers that we can use. Okay, the first and the easiest is going to be a reclaim of that most recent low, or a failure of that most recent high. So for example here, if this is price action, right? We have one low, a second low, bullish divergence confirm, our entry would be on a reclaim of that previous low that created that bullish divergence with our invalidation at at that low, targeting higher prices. Obviously, the same would be true here for this short position, invalidation at that high, targeting lower prices. To make this a more confident trade, you can also look for an inverse fair value gap as we are reclaiming that low, right? So what this means is that as price is making that lower low, we'd want to see a bearish fair value gap coming down, sweeping this low, see that bullish divergence either confirmed or forming. Remember, it's okay to anticipate a bullish or bearish divergence, meaning even though it might have not confirmed yet on our indicator, we can see it in the process of forming, and our confirmation would be an inverse fair value gap, reclaiming that previous low, also known as our manipulation model, which is a trading strategy that I teach on this channel as well. Or you can wait for the 1-2 setup. So after you see that bullish divergence, what you can wait for is a break of structure here, meaning price do something like this, and then look for a retest into our local golden pocket. So we're seeing a sweep of liquidity, bullish divergence into a market structure shift, and then look to enter on a retrace to that local golden pocket. And if this sounds confusing, I'll jump into some live examples that I'm looking at in just a moment. Obviously, the opposite will be true for the bearish scenario. So sweep of liquidity right here, followed by a bearish divergence, and then we'd be looking for a market structure shift right here, and then look to catch the retrace of that local golden pocket for lower. So taking a look at Ethereum here, right? Let's do this together step by step. We have price at a key level, right? This is step number one. We need to make sure price is at a key level or a point of interest. But as you can see, just in general, these bullish and bearish divergences are very accurate, especially when you're using this multi-time frame divergence analysis and you are trading with the trend. Step number two, we want to see multi-time frame analysis. So the 1 hour oscillator needs to be oversold as we're seeing bullish divergences on a lower time frame, which is exactly what we're seeing here. So that step is crossed off. Step number three, this is where we find our entry, right? So either entering after a recapture of the low that we swept. So you would already be in this trade, probably a sweep of this low. So you'd already be in this trade if this was your entry trigger. Or what you can do is look for the 1-2 setup off of this level, right? Looking for that lower time frame retrace into your golden pocket fib, which we get right here. Again, invalidation will be at this low. Again, going down to the 5-minute, clear bullish divergence here. This is not the kind of bullish divergence that we want to be taking, right? We want to look for that clear bullish divergence, right? Large wave here in this oversold, clear trigger wave right here, confirming in real time on this candle. And we get that 1-2 setup right here, stop loss at this low, targeting at least these highs here for your first take profit. Let's say I want to take this on a higher time frame, right? Still using this momentum as my confluence. In this case, I can maybe wait for an external shift in structure, meaning for price to close above this high, and then I can look for that 1-2 setup back down into this golden pocket, again with my invalidation at this low. So many different ways for entry based on your risk criteria. But for starters, guys, the easiest way to enter this trade is going to be using either inversions, also known as inverse fair value gaps, which we don't see any right here, or the 1-2 setup, a reclaim of that previous low into the 1-2 setup. And that would be your entry trigger here, always ensuring that you're taking this trade at a higher time frame key level. Or if you wanted something super simple and rule-based to follow, just enter on the reclaim of that previous low. So you would enter somewhere right here with your stop loss right here. I showed you guys this on a lower time frame, but this can also work on a higher time frame. Sweep of external liquidity here, right? On the 1 hour time frame. Clear bullish divergence, right? Price is making lower lows as momentum is increasing to the upside. Bullish divergence confirms right here, closing back above the previous low that we had swept, right? That's our long trigger. Invalidation at this low, targeting external highs as our take profit, guys, right? It's a 1 to 5 risk to reward. And I'm not making this up, right? You can see this in real time. These signals occur in real time, right? They're non-repaint signals. Sweep of external liquidity, bullish momentum, right? Price making a lower low, momentum increasing to the upside. There's our inverse fair value gap right there. Invalidation at this low, right? At least moving your stop loss to break even at this most recent structure high, right? Probably a break even trade on this one. Bearish divergences here, right? Sweeping this high, confirms on this candle, right? Enter the short position. Invalidation at this high, targeting these lows down here, right? A 1 to 4 risk to reward. This is just using divergences on a 1 hour time frame at key levels. Sweep of this high right here. Bearish divergence confirms. Inverse fair value gap, right? Inverse fair value gap right here. Invalidation above this high. Moving your stop loss to break even at the most recent structure low. Targeting lower prices. Bullish buy down on the oscillator in the oversold zone. probably bullish divergences down here on a lower time frame, inverse fair value gap in the 1 hour. So hopefully you guys kind of understand how you can trade momentum using bullish and bearish divergences and using overbought and oversold zones as your confluence. The indicator that I use is the EzOscillator. This is the indicator that I have custom coded specifically for my trading strategy. You have hundreds of traders using momentum day to day in their trading to make better decisions. If you guys want access to the indicators for yourself, make sure to click the first link in the description below. If you guys have found value from this video, make sure to leave a like, comment something down in the comment section below, subscribe to the channel for more trading content, and I will see you guys next video.